it's kind of a brief story before we get started. People ask me, and I don't talk about myself very often. I'm more interested in trading and helping people become traders. I think people who can apply themselves, that have the right emotional setup structure, can be successful traders if they're able to follow the methodologies and strategies. But people do ask me how I get started as a full-time trader, because I was trading part-time for quite a long time, but I became a full-time trader about 14 years ago. And the story is, what happened was, I was working in IT. I'd been working in IT for many years, I had my boss, a good friend of mine was my boss, and he ran into some financial problems in the fall, and laid me off 2 weeks before Christmas, 14 years ago, a little over 14 years ago. And I'd been trading at home, and mostly just buying stocks and doing covered calls on stocks, etc. But I was trying to do some options, just swing trading options, etc. So I took advantage of being laid off to try to trade, and so that was middle of December, just before Christmas. And of course, end of December is not exactly a great time for trading, but I traded, and December was fine. January, I had a really good January, good month trading, day trading and swing trading. February was really good. About halfway through February, my boss calls me back and says, called me, wants to get together. He says, wait, I can, things have straightened out here. The finances are back in line. Yeah, come on back. You can start again on Monday. And so I told him, well, I've been trading at home, and I appreciate the offer, but honestly, I can't afford to come back and work for you. I just can't. It was too good trading in. So that's how I got started. It was no plan or anything. I was actually kind of thrust into it, and I had been. It's not that I was a rookie at this. I had been trading a long time, and I knew a lot about options and things, but I never did it full time. And it's a big difference when you go full time. Just very, very stressful, obviously, if you're depending on that for your livelihood. But it worked out really, really well, and that was 14 years ago, and I haven't looked back since then. So that's how I get started. That's how I get into this, and I love it. I mean, I love trading. I love options. I love looking at charts, and that's you have to kind of be somewhat obsessed, I think. So anyway, that's how I get started, and we're going to get started here in just a couple of minutes. Coming right up on time to start the webinar. We still got a lot of people logging in, but I'm going to get started here in just about 1 or 2 minutes here. So again, I appreciate everybody coming to the webinar on a Tuesday afternoon like this. After, I'm sure a lot of you folks have been trading today as well, so we'll get started. Just give me about a minute to get a little bit of water. All right, it's a little after 4:30, so I'm going to go ahead and get started. We still got a lot of people logging into the webinar, but I'll get started, and a lot of the stuff is going to be boilerplate at the beginning anyway. So again, good afternoon, everybody. My name is Dave Wise, and again, I've been trading for options, basically options, for about 14 years. I have a Compass Options text alert service and also a live trading room where we trade mostly options, and I'll go over how that works and how we've done with that. All right, so we'll get started here. First thing I have to do, of course, is a disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. Very important. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, so we'll move ahead here. By the way, if you have a question or would like to learn more, now I'm going to answer as many questions as I can, but if you have a question I can't answer or don't get to, if you just put your name and number or your Skype username in the chat box, Rory will be monitoring that. He'll give you a call back. He'll just call you one time. He's not going to call to solicit. He's just going to call to answer any questions you might have. You can put it in there anytime during the presentation. All right, and this is just kind of a graphic of what I call the SPY super system. I'll let you know what that is, but this is the system called the Compass system. It tracks institutional money flow, and this is kind of images of what it looks like on ThinkorSwim. I run it on ThinkorSwim. I do not trade on ThinkorSwim. I only run the software on ThinkorSwim. I trade on Tradia through TradeHawk because the commissions are so low. But you can put the Compass system on Tradia on ThinkorSwim, or it runs on Ninja as well. Okay, and this is just kind of a graphic of what the alert service looks like. Obviously, it's an SMS text alerts, comes on your phone, and I'll go over exactly what comes there, but it's all basic information you need to make a trade. Now, before I get started, I'm going to go a couple things. I want to talk about the market a little bit, and I want to talk about this. This slide is basically meant to discuss what drives the market. And there's two major types of traders. There's retail traders, such as myself and most likely everybody here. And we're these little marbles right here. And we as retail traders, we can't move the market. We can't create trends. We can't make any significant moves in the market. We're just in there trading. And when we're trading by ourselves without any institutions, what you get is you get a lot of chaos and chop. Market just chopping around, and very difficult to make any money. We really don't want to be trading when the institutions aren't in there. The big marble here is the institutions. These are the people that drive the market, or basically the computers and the big funds that drive the market. These are people like Goldman Sachs, JP Morgan Chase, Morgan Stanley, HSBC, all the big investment banks who also run algos, computer programs that actually trade and during the day with intraday trading as well as swing trading. They've got computerized systems that are looking for specific criteria that they program to trade. Now, when they're in the market, this is what drives the market. And our job as a retail trader to become consistently successfully profitable is to follow the institutions. When the institutions are in the trade, we want to be in the trade. Now, we're not taking any money from the institutions. These are who we're taking the money from, these other retail traders. But when the institutions are in there, this is where the market is moved. And again, the institutions are made up more than just investment banks. Think of all the hedge funds, the hundreds and hundreds of hedge funds there are with billions and billions of dollars. And there's pension funds, massive pension funds with billions of dollars. And then you have all your mutual funds, T. Rowe Price, Vanguard, all of the big mutual funds. That's where the money is, and that's the money that moves the market. That's what create trends, and that's what stop trends, and that's what we want to be looking for to able to identify that. All right, and this I've shown. This is just a graphic on the SPY. This is off of my TC 2000. I just show this. I just put this up here to show regular candles versus Heiken Ashi candles, because I'm going to talk about Heiken Ashi candles in the presentation. So I just kind of wanted to show the difference. So this is the SPY daily with regular candles. This is a while ago now, but you can see the candles in here. Now if you're wondering about the colors, I color code anything that's bullish is blue, that has a Bollinger Band expansion. In other words, breaking out of compression, it's blue. If it's breaking out of compression to the downside, it's pink. Otherwise, they're green and red. But so these are regular candles. That white line, if you're wondering, is the 8 exponential moving average. This is the 15, the orange line. This is the 50, and this is the 100, and I have the 200 here as well. So this is, again, regular candles. This was another period of time in the SPY where it was pulling back to close to the 100 a couple of weeks ago. Never quite got there and bounced. This is where it was. But now if we go to Heiken Ashi candles, you can see the Heiken Ashi candles. Bullish Heiken Ashi candles have flat bottoms, and we'll talk about this. And bearish Heiken Ashi candles have flat tops like that. And it makes it easier to see the trend. So we'll go over this as we get deeper into the presentation. But you can see the Heiken Ashi candles right here in the SPY and how bearish that was. And now we're bouncing back up again. Okay, so we have a few rules to trade by in the room that we trade by. First thing is we trade the best and skip the rest. Sounds simple. It's not that easy to find the best trades, but that's what we look for. In other words, we don't trade to make trades. Our objective is not to make trades. Our objective is to make money. We do that by only taking the very best trades that we can find. So that's trade the best and skip the rest. So we don't take a lot of trades. We're only looking for the ones that are most likely to be profitable. And profitable traders, as retail traders, we need an edge. These are the edges that we have in the Compass room, the options room, and on the alert service as well, since the alert service is getting the same trades. We use the right line Compass system, which I'll show you briefly. I'm not going to go into huge detail, but this is a piece of software that runs in my system. It runs on ThinkorSwim that tells us when the institutions are in there and when they're not, and it's really important to know that. Then we also trade relative strength and relative weakness. Then this is not RSI, but this is how a stock is trading versus the S&P 500 on like a 5-minute chart. The S&P is moving sideways and up, and the stock is moving down. It's got relative weakness. If the S&P is moving sideways or down and your stock is moving up, it's got relative strength. It gives you it increases your edge by quite a lot to be trading relative strength and relative weakness. And that, along with the Compass system, gives you a very high probability that institutions are trading that stock. And then we trade with the market trend if there is one. Choppy markets, we just focus on the individual stocks in the Compass system. And another key thing is we try to buy near support and sell near resistance. In other words, don't be chasing stocks when they're ripping up or ripping down. Wait for them to come back to a support level. They almost always do, and then join in. So those are the edges that we have. Now the Compass system, it identifies the highest probability trade setups while sidestepping the setups that look good but will fail more often they succeed. In other words, you can have a nice looking chart, but if the institutions aren't creating the trend, then that can fail very quickly. So that's what we're looking for. And it identifies when institutions are driving the move and when they're not. And it analyzes very complex trading data, which I'll go over, and displays the results in an easily identifiable visual format. This is really important because when you're looking at a chart, you want something that you can identify fairly quickly just by looking at the chart. And this does it in colors with indicators, and I'll show you those. And it makes it easier for relatively new traders to be able to identify bullish and bearish trends. So again, that's how we get an edge over the retail traders, because our edges are we only take trades that are being driven by the institutions. We trade stocks that have relative strength and relative weakness, as I mentioned, and we trade in the direction of the overall market. If you follow these three things right here, you're going to have a very high probability of getting a win out of the trade. So again, that's how it gives us an edge. Our trades are supported by institutional buying or selling. They're going to be outperforming the SPY, and they're going to be moving in the direction of the overall market. Very important, and this is the thing a lot of folks don't look at. When I look at take a trade, the first thing I look at is the daily chart, the D1 chart. I look at the daily chart because I'm not going to take a stock long for an intraday trade if it does not have a bullish daily chart, because it takes away all of your flexibility to stay in the trade during the day and overnight if you want to. In other words, you're in a trade long because you like the 5-minute setup and it reverses on you, and you look at the daily chart and it's bearish. You have to get out. I mean, you got to take your loss. If the stock is still bullish on the daily chart, still above the support levels, then you can stay in the trade. So it makes a big difference when you are trading off of the daily chart. So that's always one of the keys. All right, boom. Now I'm going to look at the recent market action here, and I'm going to show you a couple things. I'm going to use my TC2000 charts for the SPY. I'm going to go back here, and I'm going to show TC2000. This is my TC2000 S&P 500 right here. Now the interesting part of it is I want to go back and look at it since back in November here. All right, so if we go back and look at November, this is when the reversal started and the market got pretty strong. And you can see the move here from November. You can see the move right up through the moving averages, the 200 right here, the 100 right here, and I'm sorry, the 50 right here, and the 100, which is blue. Stock got through there, market got through there, and see how consistent this move was. It was following this white line, this 8 exponential moving average, with a couple of little pullbacks here in January, but it kept moving up very nicely until we get to this big red candle here, this pink candle back here, and you probably remember this back in the 4-4. Big warning sign. When you get a bearish engulfing candle that big on big volume, that's really scary. And it told us that this top market had topped out for the time being. And it tried to make a little move up the next day and chopped around, and then it fell down right almost to the 100-day moving average, not quite to it. And since then, we've recovered pretty nicely. we've moved up, we pulled back a little bit, and here we are today. And this white line across the top, that's the all-time high on the SPY. And that's how close we are to it. But a lot of these moves, have you noticed, have been gaps. Gap up, this one's gap up, no place. Gap up in a doji. This gap up, this was decent. Gap up, nowhere. And so it's been very choppy and very hard to trade intraday during this whole period in here. Very, very difficult. We need a breakout or a breakdown before we can really feel comfortable. So that's the SPY on my TC2000 chart. Now I want to show it to you on Compass. So let me see if I can get Compass up here. Well, there it is. All right, here's the Compass. So let me go ahead and switch this over to daily chart. This is a SPY. These are some scanners we've got. I'll move those out of the way. If you get the Compass system, these scanners come with it. All right, so we'll move that out of the way. So this is the Compass system. Now, here's the SPY on the Compass system on a daily chart. These are our indicators that we use to let us know whether institutions are in the trades or not. Right, so we have four of these horizontal lines down here. The key ones that I use, this is multi-time frame momentum right here. These are both momentum, multi-time frame momentum, current time frame momentum. You want these to be the same color, or at least the colors are red and yellow for short, blue and green for long. Blue and green are bullish. So right now we've got blue and green on the daily, which tells us that the market is now bullish. You notice it just switched. We had mixed colors here. All right, and it's switched to all blue and green. Now we have CPI in the morning, so that's going to be very interesting to see if that continues. So this is our momentum, multi-time frame momentum, current time frame momentum. This is our multi-time frame trend. This is the trend of the market. As you can see, it's been green since way over here, and the market's been kind of chopping around, but this is telling us that the trend is up. And this is money flow. This is a derivation of money flow right here. And again, this is also green right now. So these are our indicators that we use on our daily chart to tell us if institutions are in there or not in there. Now, the reason I point that out is you notice how choppy this has been. You see the difference in colors here, lots of greens and reds mixed together, no consistency during this whole period. So this tells you that if you're going to be trading, you've got to be taking very best trades. You can't be staying in the trades very long. There's just no consistency of trend. Right, but now if I move back, let's keep going back here until November. Remember when I said November when this rally started? All right, so we go back here to November. All right, so here's November on the Compass system. All right, so here's our indicators right here. Notice right here on 11/20 that everything went green. This told us right here that we were in a bullish trend. We'd gone from yellow to green. Everything was green. This tells us that we can start taking trades and we can start staying in the trades for a while. And if we move along here, oops, this way here, 11/20 here we go. So the market is moving up, and you see how it's staying green all the way through here. This whole period in here, this is a long stretch from 11/20 right now. We're up to 12/18. We're up to 12/25. The market stayed bullish this whole time. So this is times when you can be taking trades, staying in the trades, taking larger positions. You can gear yourself to be more aggressive as far as your trading concerned when you know that the institutions on the daily chart here are buying, and then you want to find the very best trade that you can at that particular point in time. But you know you've got the institutional buying on the SPY here, which means the market trend is up. All right, so that's important. Now, as we move into later times here, now we're into January, we're starting to get a little bit of chop. We get pulled back, we go to yellow here, and green and yellow. So this tells us we don't really have consensus. Now we get blue here on the current time frame momentum, but yellow on the multi-time frame momentum. So no good for long-term trades. We can only be taking short-term trades here. Then as we move along, we do start to get some more green right here at the end of January. And we have a pretty good stretch of that. For about a week and a half, we have a nice stretch. And then we get some yellow here. And then we go back to green again. So we're getting some nice bullish action in here. But you see what happens here. Now as we've got end of February into March, look at this, all green. Market's kind of choppy, but we're bullish trend. But then as we get into end of March, 1st of April, this is when things start to deteriorate. And you can see right here, we start to get some red, yellow here, and then we get that big red candle right there. So everything's yellow, and now we're going bearish here, during this period here, you can bearish, but notice that the trend was still green up here. So this is giving us an indication that it's not the greatest time to be trending long. Plus, we were very close to the 100-day moving average, and this is what we've had since then. So you can see we've got lots and lots of mixed colors. So in this particular time frame, I haven't been taking very many trades, and they've been fairly short term because the market is not giving us that information. So that's what I look for on those charts to determine what the market trend is, because the market drives everything. And if we got a good market in our favor, and it's a trending market on the daily chart, you can be a lot more aggressive in your trades. So that's important to understand that. So that's one of the things I look at all the time. So this is what I look for to find the highest probability trade setup. This is basically the methodology we go through in the room. I call it a funnel. It's basically just a visual funnel, but this is what what the criteria I put on trades stocks when I'm looking to trade a high probability trade setup. First thing I look is at the daily and 5-minute charts. They have to align. As I said, very important that the daily chart is bullish. If you're going long, the daily chart needs to be bullish, and then you just enter off of a bullish 5-minute chart when it gets a level that you want to get into. But you know you get a daily chart that can go by that. That's important. If I don't have that, I'm not in the trade. Next thing is we want to trade with the trend, both the stock and the market, if there is a trend. If the market doesn't have a trend, then we're focused on the stock trend, which is determined by the daily chart. Now, once those are met, if I've got a daily and 5-minute to match up, then I look at the compass indicators which I just showed you, and I want those to align. I want the compasses to be bullish if I'm going long and bearish if I'm going short. If I don't have compass indicators aligned, I'm not going to trade it. Again, this is telling me that the institutions are behind that trade. They're creating the trend. So I only want to be in the trends when the institutions are in there. If they're not in there, I don't want to be in it. So this is critical. Then once that passes this muster, then I look here and I look for stocks that have relative strength or relative weakness versus a SPY. So if I'm going long, I want to take a stock that's got relative strength that day. And if I'm going short, I want a stock that's got relative weakness that day. Once I get a relative strength stock, it looks good. Then I look to see if I'm near a support or resistance level. If it's near a support level and bouncing off of there, then I can go long and off a resistance level to go short. And if it's not, what a lot of times I'll do is I'll just go ahead and set an alert on my chart to let me know whether support or resistance level is met. So this is what I look for to get into a high probability trade setup. These are the ones we take. That's why there's not that many, because we don't have a lot of times we have all these things aligned for us. So again, this is the funnel method for highest probability trade setup. This is just the verbiage on it. Identify the market trend for the day if there is one. Get the key ones here. Stocks should be traded, should have a daily and 5-minute chart aligned. The compass indicators must align in the direction of the trade. These two things here are going to give you a huge edge. If you add relative strength, relative weakness, now you've got a massive edge over the other retail traders, who most of them don't have any idea whether the institutions are in the trade or not. And one thing here, if you went off a 5-minute chart, I use the VWAP, the volume weighted average price. That's very important. You don't want to be trading a stock long if it's below the VWAP and vice versa. That's something that the institutions use a lot, the volume weighted average price, and it becomes a very nice support and resistance level. And again, enter trade near confirmed support for a long and near resistance for a short. And if you look at the daily chart, there should be no nearby resistance if you're going long, or no nearby support if you're going short, because that limits your profitability in the trade. If you enter a trade and the 200-day moving average is 20 cents above your entry and you're going long, you don't have enough room to the upside. And the key thing here, and I go over this in the room every single day, patience is important. People feel like they're a trader, they have to trade. I have to be in a trade, I have to be in a trade. You don't have to be in a trade. A lot of times having no trades is the very best trade. I've had several days in the last couple of weeks where I haven't even taken a trade because they aren't high probability. I'm doing it because you're taking that because you're bored, not because you have an edge. You only should be taking trades that you have an edge. All right, so this is just kind of goes over the strategies we use in the room and the alert service. Straight calls and puts, obviously. I do debit spreads using weekly options expiration. This is a little different from what most people do. I don't use debit spreads that go out multiple weeks. I'm using this week's expiration. The ROI on those are much better than the longer term ones. I use what's called time spreads over earnings. It's a calendar spread. And this is a non-directional trade. I'm only trying to capture volatility crash. I'm not trying to predict which way the stock's going to go. I don't care which way the stock goes. I just want to capture the volatility crash when the earnings come out. If you're familiar with options, you know just before earnings, the volatility is priced into the premium, so the option premiums go way up. And then as soon as the earnings come out, the option volatility drops way down because now they know which direction it was going and how far it's going to move. They peel the volatility out of there. And this particular strategy allows you to capture that volatility crash. I also use what's called the weekly ATM strategy. It's called the weekly at the money or automatic teller machine. Basically, when the market is correct, the market needs to be neutral to bullish. I sell puts against a longer dated put out in the future. So if I take Microsoft, I might be selling $100 puts if the stock is trading about 100, and I'll buy a $95 put out 2 months. And that gives me protection because I'm protected to the downside. And it also creates, since I'm selling puts, it creates margin, very small margin, because I'm just paying margin, the difference between the two strikes. And we do regular standard credit spreads, which you're probably familiar with, mostly put credit spreads, which captures premium time decay on stocks as the time goes by. So we do a lot of credit spreads. And then I do a thing called the SPY Super System. So this SPY Super System are very high probability trade setups, but they don't happen very often. And I can only call them out in the room. I can't alert on them. It's when the SPY is moving along. All right, Vincent's watching. When are we going to talk about Heiken Ashi? In just about 5 minutes, Mark. I'm going to spend quite a bit of time on it when we get into it, so it won't be much longer. I just want to, I have a sequence I need to go through. So I want to cover the alert service. Who's it designed for? Well, it's day traders and short-term swing traders. This is not an investment service. It's designed for traders who can't watch or don't want to watch the market all day. You get real-time alerts on the highest probability trade setups. When we identify highest probability trade setups, we take them in the room. We alert to the alert members at the same time, and we find the highest probability trade setup by identifying institutional involvement, as I said. And I also look at market internals, and then I look at technical analysis to determine the best of those stocks that we find. All right, now this is just a P&L of this is the fall of last fall. I need to update this thing. That's typically a P&L of what we did in the room if you use $2,000 per trade. But so I'm just going to run quickly through the results. I want you to see what the results have been, and not so much to show you specifics. I want you to be aware of what the percentage gains you're likely to see in the trades. I don't want people thinking that there's going to be 400%, 500%, 600% gains on a trade. You get a lot of emails and webinars that tell you that you can, we make 200%, 300%, 400%. That's just not, you can't do that long-term practically. So this was the September trades. This is the percentage that we made on individual trades here. Several different kinds of trades, but you can see it runs 20%, 40%, 5%. We losers. We do have losers most every month. I think I've only had 1 month with no losers. But again, this STX was 100%. But you can see what the percentage gains were, and we had a 92% win rate here, 25 and 2. And if you put 2,000 in each trade, and that's just an arbitrary number, 77.88 was the profitability. October, very similar. Again, I just want you to see that doesn't change much. The win rate is about the same. The profitability is going to be different because depending upon the market, you can stay in trades longer when you get a trending market, as we just talked about. All right, so here's Moderna, 33%, just 6% in Tesla, but McDonald's 10, Restoration Hardware 43, that was nice. We lost on GNRC, Etsy, and Sedge, but pretty nice month overall, 24 and 4, and 44.80 on profitability. November, again, same thing. You can, and I just want you to see this. This was a credit spread. This was a strangle. This was a put credit spread, 25%. This is the kind of percentages you'll see overall, depending on the number of trades we take. Obviously, this was 84% win rate, netted 51.60. Netted a little bit more than October, even though we had a lower win rate. And these are December trades, very slow month. In December, 14 and 2, Christmas time, New Year's, not a good time for trading. So we didn't take a lot of trades, but we had a nice month and some nice profits in there. So, and I just I'll speed through these things, but this kind of shows you what to expect and the kind of trades that we're taking here. Time spread, nice 39%. And again, we just had 2 losses in January, 20 and 2 for 75.05. And February was a really good month for us. We had 24 and 2, 92% win rate, but 11,745. This was one of our best months so far, and it was pretty nice. Again, the alerted trades were 20 wins and 2 losses, a little bit less because I can't alert on every trade. I don't alert on trades that I take like a quarter or 4 in the afternoon, or if I think I'm only going to be in the trade for half an hour or so. All right, so this was good. It was good for February, and these I'll just run right through. These are some of the specific trades that we alerted on, and how much we made on them, and when they get in, when we go out. This was crowd in, that was fairly recent, in for 690, out for 8. Again, 16% profit. But you can see the percentage profits are exactly what they were on what I showed over there. But these are specific trades that we did on the alert service. Again, so workday 26%. So you can see what they are, and it doesn't change much. But these are specific trades we sent out. Right, and this is a recap of the first quarter of 2024. I haven't recapped too much beyond here, but we had January, February, March, 65 wins, 11 losses in the trading room, 18,763 profit. Alert service, 41 wins, 6 losses, 87% win rate, 12,224. This is based on $2,000 a trade. Again, you maybe only make 500, you may take 1,000, you may do 5,000, but this I have to have a baseline just so that I have something I can compare the results to. All right, and this was the whole of 2023. People ask me, how about last year? This was 2023. Investing 2,000 in each trade taken in the room produced a $60,000 profit. So if you had an account of 50,000, this is arbitrary. You'd be using 4% of your account for each trade. It grew by 120% over the year. So 50,000 went up to 110,000. So at the end of the year, if you were still putting 2,000 into a trade, you'd only be using 2% of your account balance. All right, so I just wanted to kind of cover that. Now I'm going to show you what comes out on the alert. So when you get an alert, what you see on the SMS alert, you're going to get the stock symbol, obviously the option strike price, the option expiration date, and the price to pay for the option. And this could be a range, could be $1.05 to $1.10, something like that. We took one today on ENVX, and we got in for $1.10. We're holding that right now. And so you'll get the entry price. Now, usually I don't put the exit price on the same alert. I wait until I watch the price action. On this particular one, it may have been, I thought it might have been a day trade, so we do have a sell price on it already. We get in for $1.10. We have a sell price in for $1.50, but I'll review that in the morning and adjust it if needed. And just a note to anybody who's on the alert service, or you want the alert service, when I give you the price to get out at, your sell price, the profit target, then you want to put that in as GCC, a good till canceled, so that if you're not at the machine in the morning, you're not watching the market, if it goes up and hits the strike price or hits the profit target, you'll be out as long as that's good till canceled. So you don't want it in there as a day trade. That's just kind of a note. All right, and we're going to cover how we achieve such stunning results. Well, I already told you, we identify when institutions are driving a trade and when the market internals are bullish, and we only take trades when both of these are in our favor. Not really true. I'll take trades even when the market internals are neutral. I won't take trades when the market internals are bearish. I won't be going long. But if they're neutral, as long as the institutions are in the trade, I'll take the trade. All right, and I'll skip up through here. This is institutional money flow. I've talked about that a lot. Obviously, we're looking for when the institutions are in the trade and when the stock itself meets all those criteria. That's how we do this. So we get high probability trades of success here. And how we do this, and this is interesting. All right, how do we know when the institutions are in a trade? So we do what's called the triple screen assessment, and it's basically a fractal. We're using multi-time frame comparisons. All right, we're doing assessments of multi-time frame, but we do it on momentum. We have multi-time frame momentum and current time frame momentum. Then we have the trend, current time frame, and multi-time frame, and then money flow. So when we look at the money, if the momentum is moving up on, in a case of a 5-minute chart, it's 5 minutes, 15 minutes, and 45 minutes. If it's moving up on all three of those, and the trend is moving up on all three of those, and the money flow is moving up, the likelihood that it's institution in there is really, really high. All right, and we're going to get into the Heiken Ashi candles here. This is, again, I showed you what the compass system looks like on the first chart I showed you. This is just a Heiken Ashi candle set up for Tesla. And this is actually one we traded quite a while ago, but I just use this as an example. You can see the compass system is telling us that the institutions are buying everything. I mean, they're buying Tesla across the board here. And this is a 5-minute chart. But these are Heiken Ashi candles. And if you notice for Heiken Ashi, I'm going to go into this here in some detail. Heiken Ashi candles, these are dojis. You got a wick and a tail, a wick and a tail. But notice when we move to this candle and this candle, the bottoms are flat. There's no tails on these candles. That's how Heiken Ashi identifies a bullish reversal. This is a bullish reversal, and so is this one. And this is where we took the trade right here. And if you notice that the flat bottom candles all the way up on these Heiken Ashi candles, this tells you that you're in a nice trend, and you see how easy it is to see how the trend is continuing. No reason to get out of this trade as long as you get flat bottoms. Now, once you get a wick and a tail, then you make a decision as to whether perhaps this is the time to exit the trade. That's what you look for, and that's where I exited. But see how easy that is to spot, and so that's what we're going to talk about. We're going to talk about Heiken Ashi, right? So Heiken Ashi candles, and what's the advantages over standard candlesticks? Well, there's a few. First of all, it identifies confirmation of a trend reversal. When you're looking for a trend reversal, if you're looking for stock, you want to go long, but it's pulling back to support, you shouldn't really be getting into that until it's confirmed that it's gone back into the original trend. Now, if you're looking at regular candles, sometimes it can be a little bit noisy and a little bit more difficult to figure out. If you're looking at Heiken Ashi candles, as soon as you get a Heiken Ashi reversal candle, which since Heiken Ashi candles are made up of 2 candles, then that gives you a confirmation of trend. So that's going to give you a much better chance of not having a breakdown in that. So it allows the trade entries on a confirmed reversal, avoiding failed breakouts. This is really important. If you're going through a resistance level and the stock's moving up through it, and you get a Heiken Ashi reversal candle through there, much more likely to work than if you just get a regular 5-minute standard candle going through there. It smooths out the price movements to eliminate noise, as you could see on that chart I just showed you. It allows traders to stay in a trend trades longer, avoiding shakeouts. This is really important. You'll have a lot more confidence being in a trend without getting shaken out by all those noisy candles, especially if you're looking at 2-minute candles or 1-minute candles. Just use a 5-minute Heiken Ashi. You'll have a lot more comfort staying in the trade. And identifies waning trends. When the momentum is starting to fade, then like I showed you on that Heiken Ashi for Tesla, you can go ahead and take profits. And it's much easier to visualize the current trend when you're looking at Heiken Ashi candles, for sure. So again, if you've not used them in your technical analysis, you might want to try using them, because I think you'll find they've improved your trading. They helped me a lot when I started doing these. What that means, Heiken Ashi means average bar in Japanese. Again, smooths out the price action, so identifying trends and reversals is clearer. It eliminates noise. And again, bullish Heiken Ashi candles have flat bottoms. Bearish Heiken Ashi candles have flat tops. And bullish trends will have flat bottomed Heiken Ashi one after another. And bearish trends will have flat topped Heiken Ashi candles one after another. Very easy to identify that. And generally, you can stay in a bullish trend as long as no flat topped Heiken Ashi candles appear, indicating a lull or reversal in the trend. All right, so to talk about, I'm going to show this graphically in a minute, but to show you how you find a Heiken Ashi reversal, because these are important. Heiken Ashi reversals is really, really important when you're looking to enter a trade. You kind of want to get in off of a Heiken Ashi reversal. So a reversal in a bullish trend is going to have a flat bottomed Heiken Ashi candle, and followed by a smaller doji Heiken Ashi candle. So it's going to have wicks and tails, followed by a flat topped bearish Heiken Ashi candle. So when you go from a flat bottomed candle to a flat topped candle, or with a doji in between, that's a Heiken Ashi reversal to the downside. Right? So again, the doji candles indicate momentum is slowing. It's time to be prepared to take profits. And I'll show you some of those. One thing to be aware of, by the way, if you have Heiken Ashi candles on your chart, the stock price is not going to reflect the actual stock price. It's going to be off by a few pennies because of the way the Heiken Ashi candles are constructed. All right, so it's not going to be exact, but you just look at your other chart and see what it looks like on your trading platform. And if a note here, and I'll talk about this in a little bit. If you're looking to reverse a trend with Heiken Ashi candles, so you've got, let's say you're in a bearish trend and you've got some big Heiken Ashi candles that are red coming down, and you want to reverse into a bullish trend. Make sure that the bullish trend doesn't consist of little tiny green Heiken Ashi candles when you've got huge red candles coming down. You need to have a good size reversal if the downtrend was really with strong candles. In other words, don't take a reversal for tiny candles if the actual trend had been created by big candles. You want it to be similar to the same size. All right. Let's see. Yeah, I use the 5-minute candles for these, and again, that just kind of goes into how we're using things. So I'm going to skip past this. So this is a graphic of them, and then we're going to look at a few of them. On this Heiken Ashi, this is just a graphic of Heiken Ashi. Now, you see this flat top? This is a bearish Heiken Ashi candle. And then you notice we've got a wick and a tail, still bearish though, right? We haven't got a reversal. Now here, we got another flat top. So this is actually, this is a bearish continuation. In other words, you're in a bearish trend. We're going from a wick and a tail to a flat top again when we had a flat top here. This is a bearish continuation to the downside. This is a Heiken Ashi continuation versus a reversal. And you notice we stay in it all the way down here, it's giving flat tops, flat tops, flat tops. Now we're starting to get some green candles with wicks and tails here. Another one with wicks and tails. Another with a wick and a tail. Now we get a flat bottomed Heiken Ashi candle right here in the screen. This is a Heiken Ashi bullish reversal. So if you're in a trend and you were waiting for the stock to pull back to support levels, and you started to see this action, and then you saw this above the support level when it bounced, this is where you would enter. This is where you would enter the trade right here. This is the perfect entry. It's a Heiken Ashi reversal candle, and most of the time on these, you can wait for them to close if you want. I typically, once I'm 2 or 3 minutes into a 5-minute trend, if I've still got a flat bottom, it's very unlikely to reverse. I'll take the trade there. Now notice, interestingly, on the Heiken Ashi candles, each candle starts in the middle of the previous candle, just like that. Here it is starting in the middle, starts in the middle, starts in the middle. Because of the way they're constructed, they're made up of 2 candles. So here you have a Heiken Ashi reversal, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. If you entered here, you'd be in good shape here as the trade went right in your favor. Okay, I hope that is fairly clear. So I'm going to show a few setups here. This was a test, the one we looked at before. And what I want to do is, this is a couple that we've traded recently. This was Gilead. This is a daily chart. This was a Heiken Ashi reversal. We had a little wick and a tail here. Heiken Ashi reversal with this pop. This is a pop out of the box symbol right here, or a break of compression. This is where we traded Gilead. And this was GE. Traded it right here. See the wick and the tail, flat bottom. Heiken Ashi candle right there. And this was an IBM. This is off my other chart, my TC2000. This is what's called an algo line I draw. This lets you know where the institutions are looking for resistance or support. And you see how it broke through that on a Heiken Ashi candle and broke through this resistance level. That's a beautiful entry for IBM right there. This is Teva, same thing. Again, see how we're coming down? We hit a flat bottom right here. That's a Heiken Ashi reversal. We march higher. Most of the time when you get a Heiken Ashi reversal bullishly or bearishly, it will repeat for at least a few candles. And so this was a daily chart. So this was a nice little run in Teva if you entered that long right there. All right, so I'm going to look at some live charts here on Heiken Ashi, and give me a second here, because what I want to do is I want to move this over, because I'm going to look at some Heiken Ashi candles. I'm going to go to the daily chart, and I have to run a scan, so bear with me just a minute. I don't have to do that. I think I've already got them set up. Hold on. Bear with me. All right. So I'm just looking at stocks today that actually had a Heiken Ashi reversal on the daily chart at the end of the day. So I'm just gonna, I haven't even looked at these. I'm just gonna go through them and see what they look like. All right. All right, so here they are. There's DB, that's the Heiken Ashi reversal right here. Let me switch this over to Heiken Ashi candles. There. All right, so there's a Heiken Ashi reversal right there. You see the wick and a tail, flat bottom. All right. STM, same thing. So what I do is I look at these and I look for something that looks like that it could work. I'm not too thrilled about this. I'm getting reversal with a 50-day just above it. But notice how nice this reversal was right here on STM to the downside that you could have ridden down for a good long time. All right, CNX, too choppy. This is LPSN. This is a fairly cheap stock. I wouldn't mess around with that one. Fuel cell, kind of a good, interesting reversal right here in FCell today, but again, a cheap stock. Nova, this was another solar stock today. It's been kind of chopping around. It put in. So this is one you'd be watching in the morning to see if it bounces from there, because typically they'll repeat with a couple of candles after that. And I'm just going through these randomly. This is EVGO, nice Heiken Ashi. You can see the Heiken Ashi reversal on these. So these are ones that become potentials to take overnight or take tomorrow. You know, I'd be looking at things like the 100-day moving average. So here's one at ERJ. If I switch over to the normal chart in ERJ, this is what it looks like. You can see it looks pretty nice. And if I switch to Heiken Ashi, I can see that I've got a Heiken Ashi reversal right there off of this candle with all these wicks and tails, telling me it's likely to continue. As you see, we did one here and it moved up pretty nicely. And we did one here and it moved up pretty nicely. So I'll show you those, and I'm going to show you a few of the bearish ones too, because it works both ways. All right, so here's Baba with a Heiken Ashi reversal to the downside. Not that I would take that one, but the daily chart's probably still a little bit too strong. Yeah, this was a gap up yesterday, gap down today. So it's Heiken Ashi, that's the Heiken Ashi for Baba. These Eli Lilly, whoops, wrong one, Stone. Big bullish, bearish candle on Stone today. And again, if I see something like that, there's a bearish reversal right there in Heiken Ashi candle. I'll take a look at the regular chart, see what it looks like, and I see how it went down to the 200 purple line and bounced off of it, so I'm not going to take it based on that. So I'll just show you a few of these, but this is, you can see the Heiken Ashi reversal. I just want you to understand what you're looking for when you see Heiken Ashi reversals. NOTV, another nice one, most likely was earnings. GEHC, nothing too great there. Donut, Krispy Kreme, that's a pretty nice reversal right there. This is one I'd definitely be curious to see if it continues down tomorrow. That's a nice Heiken Ashi reversal. See the flat top after having a wick and a tail. I like that. ICCT. So that's what I look for on these Heiken Ashi candles, so that you can see what they look like, and it can really help you trading a lot. It can really help you trading a lot. All right, so let me see if I had any questions on that. Okay, so Mark was asking when we're going to talk about Heiken Ashi. So that's Heiken Ashi. I didn't want to spend all day on it, but that's basically what the Heiken Ashi candles look like, and how you can help your trading by identifying those, especially for reversals back into a trend, both bullish and bearish. So I want to show you some charts of the recent trades we've taken lately. These are high probability trade setup, so you can get a little bit more exposure to the Compass system. You've seen what we did here for trades, but this was workday that we took not too long ago, 30-day profit. We're in this for 5 days. Again, these, by the way, are Heiken Ashi candles on this one, but you can see the reversal right here. And this is the Compass system produces, this is called a dynamic compression zone, as it breaks out of dynamic compression on a daily chart. Beautiful entry right there. We got in actually here on this blue, and it went to yellow. So I had to watch it pretty closely, but the Compass told me on a current time frame momentum, which was a daily chart, was still staying blue. And this was kind of going back and forth. Then everything went over to green as it moved up. Sometimes I'll front run those when that happens. MDT right here went from yellow to blue. Everything else is green. Perfect entry spot right there. 25% on a swing trade in MDT. BKTX, another quick trade here, 3 days. Again, everything went to green. We had this nice gap up here. Took this and 30%, wasn't bad. 30% gain in 3 days. McDonald's, this was an overnight trade in McDonald's. We took it long right here. Everything's green, the institutions are buying, but it's coming out of this dynamic compression zone, the shaded area. And we get this pop out of the box single. We took it here, we sold it here. Just went in at 8:30, out at 11:30, just overnight. 37% gain in that one. This was Moderna. This was a short we took in Moderna. And this was coming off of, this is a daily chart, so I don't use this. This VWAP does not count to me on a daily chart. I don't use it. This was a breakdown out of compression. See the compression break here? Stock going sideways, had a nice move down. Everything was yellow or red, and we took it, and we took 33% profit in Moderna. This was another one at Amazon, 32% profit on this. Everything green except for the long-term trend. But the long-term trend was yellow because it had been so choppy. But I like this, and I front run it and take 32% profit. We just traded this during the day, by the way. That was an intraday trade. JD, 61% profit here. Just traded this candle intraday. Everything you can see red and yellow. Dollar Tree, 25% profit on that. You can see everything. I mean, you can see that they were selling the heck out of this. Now, once the institutions are selling, it doesn't mean that the stock's going to move down right away. It just tells you that it's likely to at some point in time fairly soon, which is what this did. We have compression, we had dynamic compression zone, and then this big candle to the downside, which is where we took it. Datadog, same thing. Little choppy, different colors. Then we go to all red and yellow. Took it right here out of a dynamic compression zone to the downside and took the 21% profit on this. And Crowd, another nice one to the long side. This was the 20% profit on this. Again, we only just traded this intraday. Notice we had green and blue here on these three. I don't worry too much about the money flow when I've got this much green and blue here. And we took it here and took 20% profit. So just so you can see what some of these charts says. This is a 5-minute chart on Amazon. See the compression right here? We don't take it until we get a break. We get a break right here. Everything is green except for the money flow, so it's fine with me. All of the momentums are green. I'll take that, except for the trend, sorry. I'll take that right there off of a pop out of the box symbol and 32% profit in 45 minutes. We just rode this right up, took the options on it, and nice little 32% profit at Amazon. ENPH, this was another nice one, 20% in an hour. You see the compression, pop out of the box telling us we're coming out of compression. Everything's red. We can see that the institutions are selling the heck out of this thing. We take it right here and we write it down for an hour and we take 20% profits. This was an interesting one. This is one I like to go over. This was a Verizon. I keep this up because Verizon doesn't move an awful lot. The options are really tightly spread. They don't have very tight spreads on them, very wide spreads on them. So I get into this one for an in-the-money trade, an in-the-money option for 45 cents. In the money option for 45 cents. Everything's red, so we took a put, 45-cent put. Notice it's coming below the VWAP. VWAP's the pink line with a pop out of the box symbol right here. We take this here and we wrote it down from 45 cents to 67 cents. So $45 a contract. So if you had 10 contracts, $450. An hour later, you get out at $670. Pretty nice trade without an awful lot of risk in that. This is a SPY super system. When I talk about the SPY super system, what I'm looking at is I'm looking for the setup. I want the institutions to be selling the SPY, which they were. I'm looking for a pop symbol off of a support level or a resistance level, which was this 15 EMA, the little red line. So this is where we take the SPY super system right here. And it has to be fairly quick. And I looked at the market internals and those were also bearish. So I had market internals, I had a breakdown, and I had the institutions selling, and I had compression. So this is where I took it. And again, we just took this for about 7 or 8 candles and we're out. As soon as I get a green candle like this or like this, I'm out of the trade. I just take it and I just traded SPY puts on that. And Netflix, another one we trade. I was trading it frequently when it was more active, but right now this was when we took this as off a 5-minute chart. 20% profit here. We get in here as it came below the VWAP on a 5-minute chart. Pop out of the box symbol to the downside and move sideways. Continued down, took 20% profit right down here. Everything's red. The institutions are selling. We feel comfortable being in that trade. Tesla, 30% profit here. A short, you notice it went from blue to yellow, and then everything else was yellow or red. Take it right here and just write it right down, right to the end of the day. We took 30% profit. So we're getting this about 2:30. And this is overnight. We sometimes will take them overnight if I feel like the setup is right. In this case, we were bearish. Obviously, it was bearish, red and yellow. This was a 5-minute day chart at the end of the day. I had a pop out of the box symbol. I bought it here, and I got lucky because Tesla fell from 120 to 112 overnight, and we're able to get out. It was a pretty big gain. We made about $7 a contract on the puts, but that was telling me when to take the trade, and it worked out very nicely. All right, so there's a Tesla. I've shown you that before. And this is just, I want to show you, this is QSR. The reason I have this here is because I want to show you, this is a daily chart. So I was looking at QSR, is moving sideways, and we got green here on this candle right here. So I wanted to trade it long. So what I did was I switch over, and I look, here's the QSR on the 5-minute. So this was a daily, so I know it was bullish. I look at QSR, I know it's bullish here. I know it's bullish. I know I want to trade it. I'm looking for my entry. You see, I'm getting color changes here. I'm getting compression. Now it pops right here off of this 15 EMA right here, the little green line. That's a support level for me. It pops out with a pop out of the box symbol. I take it there. I got to be careful because I got a little yellow here, but I stay in the trade because everything else stays green. And then we rode this thing right up. This is the 5-minute chart. This is where we traded. So that shows you that the daily looked good. Whoops, the daily looked good and the 5-minute looked good, and that's what we were doing. All right, so again, just to kind of recover what we do here, I don't want to take up your whole day, but we trade straight calls and puts, debit spreads that we talked about, time spreads over earning. This is how we capture volatility crush. Weekly ATM, this is a bullish strategy, bullish to neutral. And credit spreads, which is bullish to neutral. And the time spreads are basically non-directional. They're neutral type trades. So I do that, and I also do some strangles now. I've been working on a strategy for strangles, using strangles, which are also non-directional. Just looking for big moves one way or the other, and that's been working out pretty well. Got about 180 of those trades I've been able to test so far, and it's about 87% win rate. So that's what I just call those out in the room. So those are the strategies we use. Again, there's the text alert service. And just to go over the proposal of basically what we offer, this is the alert service. Again, the alert service comes with a month in my room. It also comes with a Discord chat and text, as well as a text alert service. Obviously, you're on the alert service. And I've got about 25 or 30 videos that I've done on trading options, as well as compass indicators, how to find highest probability trade setups. There's a whole video there on Heiken Ashi candles and how to use them. There's one on doing all of the strategies we use. Time spreads, weekly ATMs, debit spreads, all of those. I have videos on all of those. So again, if you're interested in the alert service, it's you get 50% off by saying save 50. It's just a full year $998, which as I mentioned, we did about 60,000 last year, but there's no guarantee if it's gonna do that again or not. Quarterly, just $396. So you can try either one of those if you want. Again, you can use coupon code 200. And this is the trading room itself. If you want to be in the trading room, it's pretty good. I mean, $11.98 for the year. That gives you the alert service as well. And that comes with the trading room. Obviously, comes with the Discord. You get the alerts and the same thing, the options to trade. Videos on how to trade all of the different strategies that we use and how to use the compass system, etc. Okay, and I'm in the room. I'm in there all day long. I have the compass system up, running visual all day long, so we can talk about it. We can see what the institutions are doing. You can put in charts that you're interested in, a stock that you're interested in. We'll bring up the charts. We'll talk about it technically. We'll talk about it whether the institutions are in it or not. We get a lot of folks in the room who know how to find these high probability trade setups. So we have a lot of eyes on the market looking for those. And the last thing is the compass trading system itself. If you want the software that runs on ThinkorSwim or Ninja, you can get it from Rightline. Again, that's $12.49 for a year for the software, and $5.98 for a quarter. It comes with my Workspace. In other words, you'll get the setup on the Compass system exactly the way you saw it on my screen, along with all the scanners that we have. And you get them if you buy the software. You get a month in the live trading room, also the Discord chat, and you get my videos. All the videos, you get it all like we get with all the rest of them. So that's the those are the offers that we have based on what we just talked about: the alert service, the trading room, and the Compass trading system. And I hope this was. I hope you found this helpful. Again, I'm not a professional presenter. I'm not a marketer. I'm just a trader, but I just try to present what I found to be very, very successful in trading. And I hope that it helps a bunch of people. We have a lot of people in the room, a lot of people in the alert service. So I hope to see some folks there. And again, there should be a link in the chat box. Let me look in the chat box. Yeah, there's a link in the chat box to all of the offers that we had right here that you can click on and take, or you can call Rory right here at 786-732-4656, and he'll talk to you and answer any questions you have. And I think that pretty much wraps up what I have to talk about today. I really appreciate everybody coming to the webinar and sitting through that. I know it's late in the day and everyone's tired, ready to get something to eat, but I do appreciate you coming, and I hope to see some of you folks in the room or on the alert service pretty soon. Everybody have a great afternoon, great evening. Don't forget CPI in the morning. CPI in the morning at 8:30. Fairly significant number that's going to make a difference to the market. You're welcome, Stephen. Thanks for being here. Appreciate it. Thank you very much.